Hello everybody and welcome to Hawkeye FX with your host Marcus Toombs on the 2nd of June 2017, and this is non-farm payroll day, and again it was a relatively quiet event, so let's take a little bit of a deeper look at it. We start off with the actual readings. We can see here the non-farm payroll was expected to come out at 185,000, but it came out below that at 138,000, and with such a kind of miss on the expectation, we would expect the currency to the US dollar to weaken significantly. The other main data here was the unemployment rate is doing very well, and it ticked down again from 4.4% down to 4.3%. And then we'll come to this one in a minute, but the average hourly earnings, and this was in line with the forecast at 0.2%. Now, if we just take a look at the figures for employment, non-farm, for the last 5 years here, you can see this is really solid job creation, especially over the last 3 years here, and this is becoming a little bit old hat to expect 200k of new jobs created. And if we look at this is the unemployment rate, we can see back in January 2013 the unemployment rate was as high as 8%, and it's been very on a gradual reduction right down. At 5% an economy is considered to be fully employed, down just near 4% now. So the emphasis on the figures is on the job creation, and the unemployment is gone out of the focus really. And what we're looking for now is, if everybody is employed, then everyone will start demanding more wages, as it's less and less easy to employ people. And the really key indicator starts to become the average hourly earnings, because once the average hourly earnings go up, everyone's demanding pay rises. Get inflation in the country, we need to put the interest rates up to curb that. And you can see here there wasn't a tick up here in this information. As yet, we're not seeing that pressure come into the economy. Now, the main focus for the FOMC meeting on the 14th of June is that there will be a further rate hike. Okay, let's have a quick look at the charts. These are the 15-minute charts, and you can see the dollar weakened on the news, and it was about 80 pips against the euro, 60 pips against the pound, about 100 pips against the Japanese yen. You can see these are, while they're sizable moves, by historic standards, this is quite a tame non-farm payroll. Now, just to put this in perspective, I go out to the daily time frames. You can see the last bar, which is today's range, is no larger than any of the previous bar ranges. And so you can see here there was nothing too untoward that happened today. What you'll also notice is the US dollar is been in this congestion against a lot of the currencies for a good couple of 3 weeks, and we're still looking for the strength to return to the US dollar.